Presentation is about advanced invoice payment and deposit management features that are helpful when you want to make a change to the already registered payments or deposits, such as undo a certain action or reverting your invoices back to the original state. And there will be a few examples in this presentation that will demonstrate the ability of reverting and changing the invoice and payment information back to the previous state. So let's start with a very simple example. We're going to use a new client, Jerry Madsen, who has only one invoice. Currently that invoice is empty, and we would like to add another line item to it. Actually, we would like to add 2 billable work times for this client. And so we're going to add them all to this invoice. This is billable work time that we have accumulated over the course of the projects that we have been doing for this client. So I just added the 2 line items in the total amount of $900. So that is the new invoice amount that is due to be paid by the client. I'm going to issue this invoice for payment, right? And then I'm going to accept the payment from a client for $900. Save and close. So here is what happened. We have an invoice that has been paid in full. We have one payment that has been made by a check for the total amount of $900, covering the entire check amount. So we're all good. But suddenly, something went wrong and the client wants his money back. He probably changed his mind, or for whatever reason you would like to undo this payment. So what do? There are many ways you can proceed from here. One of the easiest way would be to delete the payment. And when you delete a payment, the system will ask you to adjust the invoices that were affected by this payment. And that's what we want to do. So we delete the payment, it goes away. If we go back to the invoice, we see that it is currently back to being due. So the total amount is still due, like the payment never happened. Obviously, you can see that in the history that actually there was a payment, but then it was deleted. But the current state shows the information, the current status of the invoice is still like that payment never happened. What if you want to delete that invoice altogether? Because the reason why the client wanted his money back is because, he wanted you to bill him on another invoice for another entity, just as an example. So here is what we can do. We can delete that invoice as well. If we delete that invoice, the system will ask us, what do you want to do with the items that were within it? And in our case here, we want to roll back the work times. So the invoice is gone. And if we go to the work times, we see that they are still billable. They used to be billed to an invoice, but now they are back to being billable, so you can put it into another invoice. And that's what we want to do. Let's create another invoice for this client. We're going to do the same thing. I just quickly skipped through it. So we have, again, the same invoice for $900, and we're going to add another line item to it, say tax preparation services. So we want to consolidate all the fees into one invoice. Right. And now we can save it and issue it for payment. Now this time imagine a client pays you with a big check, $2,000. That's an overpayment. And we can create a new deposit. As a result of this overpayment, carry forward the remaining overpaid amount of $600 over to a deposit. Let's do that. So here is what we've got. We've got a client who has one paid invoice for $1,400, one payment for $2,000 that was broken down into a deposit. So you can see by the status of the payment that the invoice was paid and the deposit was created. And we can see another new deposit coming up for remaining overpaid amount of $600. If you open up that deposit, you will see in the history how it happened. That's me. Art Newman carried forward the unused balance of payment into this deposit. And you can actually drill down and see what that payment is. So, edit payment 22, right? Original amount was $1,400. The amount paid $2,000. The overpayment carried forward into that deposit. Everything is good. But what happens if the client, again, changes his mind? And before he changes his mind, let's create another invoice for, say, $600 or $500 for another service that he used, like bookkeeping, right? And we can pay this invoice using this overpaid amount. We're going to use that deposit of $600. The remaining deposit amount will be $350. Save and close. So now we have two invoices that were paid, right? So let's go in. Two paid invoices. Paid in full, paid in full. Payments. Two payments. One is paid by check. The other one is paid by the deposit. And we have a deposit that has been withdrawn in part. Original was $600. Withdrawn amount $250. The remaining balance $350. Everything looks good. But what happens if the original payment of $2,000, the client wants it back? What do? Well, in that case, we delete that payment and adjust the amounts of the invoices and other things that happened as a result of this payment. Let's see what happens. We deleted one, but two payments disappeared instead of one. Why? Because the deposit is now gone as well, and the deposit was created as a result of the deleted payment, and the second payment was made from a deposit that was also deleted because the first payment was deleted. So there is a chain of events that we have rolled back to the original state, and now we have two invoices that are unpaid. We have a total amount of $1,650 that need to be paid by client, because the payment that he made of $2,000 and then the payment of $250 has been deleted. So everything that we have paid off is now back to being unpaid and due for payment. And you can see that history also in the history of the invoice. If we look up the history of the invoice, we will be able to see that we have built some work times, but then we have made the payment and then we returned it back to the client. So let's start off by accepting another payment from this client. This is the third time he wants to pay us, right? So we receive a new payment. We select Jerry in our client list here. So this is the two invoices that we can pay off. And we're going to do that. And we're going to, again, use the $2,000 check. But now the overpayment amount is now $350. So we can create a new deposit right away, which will create a similar situation that we used to have. We will have a new deposit withdrawable with the remaining balance of $350. So it's the same situation as we paid the first invoice, carried forward the $600 to the deposit, and then applied the deposit amount to the second invoice. So the remaining balance of the deposit becomes now $600 minus $250, $350. That's exactly what we did in lump sum here. We did it in batch instead of doing it one by one. Now, and client wants the $350 back. So we can refund the remaining balance back to the client. The $350. We can refund it back to the client. Yes. So now we cannot use this deposit anymore because the balance is now $0. We have refunded the remaining balanced amount. And if you look into the status, you will see that this deposit is refunded in full. We never had the chance to even use these $350 because we immediately refunded it in full as it was. We could have actually deleted this deposit at all, and we will adjust the overpayment. Let's see what happens. The deposit is now gone. The payment is still there because we deleted the deposit, but here is the status of the payment. We have received the $2,000 check, applied the due amount of $16.50, and the remaining amount we have refunded to the client. So instead of going through creating the deposit and then refunding the deposit in full, we were able to get away with just immediate transaction of just going straight to refund and bypassing the whole chain of events related to the deposit. So when you undo that transaction of creating a deposit, it kind of rolls it back to the original payment and refunds the payment instead of refunding the deposit created as the overpayment. Now, let's imagine that the client says, no, I don't want your bookkeeping services. Please refund the $250 that you charged me on your second invoice. What do we do? So now we go to the invoice list and delete that invoice for $250 that the client didn't want to pay for. And we can go ahead and create the deposit, carrying forward the paid amount of $250 into the deposit. So now let's see what we've got here. We have a payment that now again changed its status one more time. The deleted invoice is shown as with a strikeout row. So this invoice was originally there, but now it's deleted, so the paid amount is 0, and we carried forward the remaining balance over to deposit. Now the check was for $2,000. We refunded the original amount of $350, and the remaining amount of $250 we carried towards the deposit. So it breaks down into $1,400 plus $250 going to the deposit and $350 that we just refunded a couple of minutes ago. So now, if we go into the client record, we will be able to see that there is again a new deposit created as a result of a paid invoice that was already paid by some payment, but that invoice was deleted. So the paid amount was carried forward into the deposit, so you can apply this new amount over to a new invoice in the future, or you can again refund this balance back over to the client. And that's what we're going to do. So we're going to create another invoice for, say, $500 this time. Tax preparation services. Save and close. Pay the invoice from the deposit, $250. It will be paid in part, because the total amount is $250 and we are paying only $250 from the deposit. So now we have two invoices. One is paid in full, one is paid in part. All of a sudden the client demands $250 back. So we want to refund that deposit that we already applied to the new invoice. We have to refund it to the client because the client wants so. In that case, we can refund the entire deposit instead of the remaining balance, which is now 0 because we already applied that deposit. We refund the entire deposit of $250, and we're gonna adjust the invoice that was paid by this refunded deposit. If we go back to our client invoices, we will see that the invoice of $500 that was originally paid, it's now again due for the full amount of $500. In the history, we will see, however, that we initially paid the due amount of $250 in part, but then we returned that $250 amount back to the client, and so the invoice that was paid off by the returned payment now becomes due again. And so at the end of the day, we are stuck with only one payment of $2,000, of which we were able to pay only one invoice for $1,400. We were moving that balance back and forth until we finally and eventually refunded it back to the client. But the invoices that were paid by that balance in between, they were rolled back to the original status of still due. That is the $500 amount that is still due. This concludes this presentation of how you can undo the payments, invoices, as well as deposits, and what effects it would have on your other payments, invoices, and deposits that were involved into that whole chain of transactions. Please watch another presentation dealing with the reporting features that will give you an idea how you can manage invoices, payments, and deposits in bulk and run different kinds of reports. So you will be able to manage your clients' payments more efficiently in bulk. Thank you for your time.